Glass skyscrapers and fancy architecture dot the small but growing skyline of Nairobi's Upper Hill, Mombasa Road and Westlands regions. This is where buildings compete for the best and most innovative look for office space. Among residential property developers, townhouses and masonettes fight for space. This is the story of the property market in Kenya, which still shows no sign of slowing down as demand for housing units continue to outstrip supply.
In 2003, we did project, for instance, in housing, that we have a deficit of about 150,000 and we're only able to do 30,000. So we can actually count this accumulated deficit in 2011 and probably even project that we are experiencing deficits of almost 200, 250 a year. For office space, our take-up is estimated about 1 million square feet a year. And this is likely to grow given the reorganization of government. And I see actually the public sector will actually drive the commercial sector. There is real demand for office space.
According to Consult, which conducts the only property pricing index in Kenya, housing prices rose 5.8% in 2010 compared to a 0.8% growth a year earlier, buoyed by a bulging middle class and healthy economic growth.
2010 has certainly seen a lot more interest in the real estate market. This has been fueled both, I think, locally. We've had a lot of movement within our local markets due to developments in the mortgage market, sort of emergence of the middle class market now taking more of an active role in real estate. At the same time, we've had a lot more international investment in Kenya as a regional stronghold, as an investment option, and we found a lot more international investors coming into play in the market. So all of this sort of put together has resulted in a real estate market that's grown quite well over the entire year.
Building, construction and architecture drove an estimated 5.1% expansion of East Africa's largest economy in 2010. Economic growth this year is seen at 6%, painting a rosy picture for the residential property market, which over the last 10 years has outperformed the Nairobi Stock Exchange.
For 2010 alone, the equity market was up 36%. And for 2011, we think there might be a slowdown, mainly because of increased profit taking in preparation for an election year in 2012. The property market will still enjoy good performance in 2011, mainly for three important factors. One, there is still an existing demand-supply mismatch, especially in the residential sector of the property market and the retail or shopping sector. And then the second reason is that Kenya is still enjoying an influx of diaspora remittances, which tend to target largely the property sector. And that will be a key driver of the market in 2011. And thirdly, institutional investors have come back strongly in the property sector, mainly after the 2008 debacle of the equities market where they had negative returns.
Just a few years ago, financing has been a huge challenge for property financiers until high levels of liquidity in the market forced financial institutions to provide mortgage financing at competitive rates.
What we've seen is that a lot of banks who did not have even mortgage departments or lending for housing departments have been set up. They've tried to lend. All the 10 big banks are offering mortgage facilities. And again, over the last 15 months, we've experienced a slowdown in interest rates up to third quarter of last year. So the cost of credit actually came down. We saw the central bank lower its CBR rate from a high of 10 to a low of 6.
Cost of land is also playing a significant role in the growth of the local property market due to devolution of funds amongst major towns in the country.
Historically, land has always contributed to less than 10% of any project, whether it's out of the city or within the city. Currently, in Kenya, around major cities and towns, especially Nairobi, you're finding land starting to contribute between 20 and 40% of a development project. And land is the only input in a proper development where you cannot reproduce.
Globally, Kenya has consistently shown resilience, with growth in property value since 2005 topping over 70%. This compared with around 35% in South Africa, 10% in the UK, and 15% in the US.
If you sort of can flash back to 2008 when the global recession was setting in, there was an element of caution in the Kenyan market where everybody, thought that if the UK and the US are crashing, then surely Kenya will as well. But that was not the case. The property market held quite strong, and our growth is, our growth curve is looking very, very steady as an overall market. And I think this definitely serves to prove the point that Kenya is a very attractive investment destination.
However, in the past few months, there have been concerns that the ransom money received by Somali pirates was finding their way into the property market in Nairobi. Analysts are cautious of the overall effect on the market.
I wouldn't attribute this to piracy money. Certainly the authorities can be able to establish whether the money that is finding its way into the sector is actually from piracy. But I think that Kenya has a very huge informal sector, and this informal sector is very lucrative. My take would be that it is monies or profits that are being made from the informal sector that are actually being invested in real estate.
Going forward, real estate experts expect the country's property market to continue with its upward gain and possibly moving into a steady level of growth in the medium term.